One, we are looking for a bullish opportunity playing the idea that the dollar Swiss is overextended. Now, what do I mean by overextended? Well, we have had 7 bearish days in a row, so a strong bearish trend, and we're looking for some relief, the market to take a breather, very similar to any other counter trend type of trade. Now, we have a few things that are going to help support our idea, and I'll kind of work backwards from the least important to the most important, if you want to classify them as that. One is going to be our relative strength index. That's going to be my RSI indicator at the bottom of your screen. Traditionally, the RSI starts to go oversold at 20. That's where this red little shaded area starts to come in. I personally like my oversold area to start at 20, right? So I like those extreme conditions. We are already at 12 or all the way at 12, which means we are whatever word would be below extreme. We are really, really, really oversold. Again, and that line is starting to bend off, giving us the belief that we may be in for a little bit of relief. Something else that we have as well, and this was one of the additions to the FTB that we're looking at, is our Keltner channel. Our Keltner channel is that blue line. I only thickened the lower one up because that's the one we're paying attention to right now. But it is a volatility band, very similar to Bollinger Bands, if you're familiar with that. And pretty much, they act like rubber bands, meaning that they stretch as the market stretches. And, think about it like this. As price action should spend most of its time within those bands. When it goes outside of those bands, it is kind of overstretched and eventually it should revert to the mean. And you can see that not only have we tested the outside of this band, but we have actually closed outside of it as well. And yesterday's full candle, sounds weird saying yesterday because it's still today, but it's yesterday's session anyway, is fully outside of that band. Now, the last signal, and this is the main FTB signal, is going to be the actual candlestick pattern on your chart. And this does a few things. One, it is a low test candle, which means the majority of the wick is to the downside, and we do open and close in the upper half, I should say, of this candle. And two, it is bigger, the range of the candle, than the previous candle. That is very important. And the next part of the plan is waiting for price action to trade above the highs of this candle. And if that were to occur, that is where you would get your trading signal. So again, this is a strategy that is meant for the hourly time frame in a very specific way. What we're looking at right here is just an adaptation of it, something we were playing around in our Q&A session. But I do think it's cool to look at these ideas just so you guys can see different ways to trade. And it is something that I'll be personally tracking because I have been looking for a strategy that I can strictly trade on the daily and something that isn't too complicated. That way I can teach it to others.